Most people believe that the Federal Reserve is the most powerful economic institution on earth because it has the power to print the US dollar. We are taught that when the chairman of the Federal Reserve presses a button, the money supply increases, and when he stops, the money supply decreases. We are told that inflation and deflation are simply a matter of the central bank deciding how much money to let into the system. But what if I told you that was a lie? What if I told you that the Federal Reserve does not actually know how many dollars exist in the world? What if the vast majority of the money, you use the money that funds global trade and the money that determines the price of your mortgage, is created by a system that the government does not control and cannot see? This is the story of the Eurodollar, the shadow money system that actually rules the world, and why its collapse is the real danger we face. I am Tom, and this is The Wealth Collapse. Subscribe now to stay ahead of the curve, because when the history books are written, you will want to be one of the few who saw it coming. To understand why the global economy is currently suffocating, we have to unlearn almost everything we have been taught about how money works. The standard model of economics tells us that money is created by the central bank. They print base money, and then commercial banks multiply that money by lending it out. This is called fractional reserve banking. It is a neat and tidy theory that is printed in every textbook from high school to Harvard. The problem is that it has not been true for at least 50 years. The real money system is not domestic, it is global. It is not based on reserves, it is based on credit. And it does not live in New York or Washington, D.C. It lives in a decentralized network of offshore banks that stretches from London to the Cayman Islands to Tokyo and Singapore. This is the Eurodollar system. The term Eurodollar is confusing because it has nothing to do with the euro currency. A Eurodollar is simply a US dollar held on deposit at a bank outside the United States. If a bank in London holds a dollar deposit, that is a Eurodollar. If a bank in Singapore lends dollars to a company in Brazil, that is a Eurodollar transaction. It sounds simple, but the implications are earth-shattering because these dollars are outside the jurisdiction of the Federal Reserve. When a bank in London lends dollars to a bank in Tokyo, no US dollars physically leave the United States. No armored trucks cross the ocean. The Federal Reserve does not approve the transaction. The Federal Reserve does not even know the transaction happened. The bank in London simply creates a digital entry in a ledger that says it owes dollars, and the bank in Tokyo creates a digital entry that says it has dollars. They created money out of thin air, just like the Fed does, but they did it without the Fed. This means that the supply of US dollars, the world reserve currency, is not determined by Jerome Powell. It is determined by the collective risk appetite of thousands of private banks operating in the shadows of the global financial system. When these banks feel safe, they lend aggressively, and the supply of Eurodollars expands. The world gets flooded with liquidity. Trade booms. Emerging markets grow. Asset prices rise. Everyone feels rich. But when these banks get scared, they stop lending. The supply of Eurodollars contracts. The world suddenly finds itself short of the very currency it needs to pay its debts and buy oil. Trade collapses. Emerging markets crash. Asset prices plummet. This is the hidden mechanic behind almost every financial crisis of the last 4 decades. It is not about interest rates. It is about the elasticity of the shadow banking system. And right now, that system is snapping back. To understand how we got here, we have to go back to the origin of this shadow market, because it was created by an accident of history. In the 1950s, during the height of the Cold War, the Soviet Union had a problem. They sold oil and commodities to the West, and they were paid in US dollars. But they were terrified of keeping those dollars in banks in the United States. They knew that if tensions escalated, the US government could seize their assets and freeze their accounts. They needed a way to use dollars without touching the American banking system. So they went to a bank in London called the Moscow Narodny Bank and asked a simple question. Can we keep our dollar deposits here in London instead of sending them to New York? The British bankers saw an opportunity. They reasoned that a dollar is a dollar regardless of where it sits. They agreed to hold the Soviet deposits. This was the birth of the Eurodollar. For the first time, there were US dollar balances that existed entirely outside the regulatory reach of the United States Treasury. It did not take long for other entities to realize the benefits of this arrangement. Corporations that wanted to avoid US interest rate caps moved their money to London. Multinationals that wanted to avoid taxes moved their money to the Caribbean. By the 1960s and 1970s, the Eurodollar market had exploded. It became the primary engine of global finance. It grew so large that, by some estimates, it exceeded the size of the domestic US money supply. The tail was now wagging the dog. This decentralization meant that the Federal Reserve had lost its monopoly on money creation. They could control the price of money domestically by setting the federal funds rate, but they could not control the volume of money being created globally in the shadow system. This loss of control is why the Fed often seems so confused and powerless during a crisis. During the 2008 financial crisis, Ben Bernanke, The chairman of the Federal Reserve famously said that the crisis was contained to subprime mortgages. He was wrong. He was looking at the domestic banking system, which was relatively stable. He was not looking at the offshore shadow banking system, which was undergoing a massive run. The 2008 crisis was not primarily a mortgage crisis. It was a Eurodollar crisis. The global banks had built a massive tower of debt based on the assumption that they could always borrow more dollars from each other. They were funding long-term investments with short-term overnight loans from the shadow market. When the housing market turned the collateral that backed these loans, specifically mortgage-backed securities, became suspect. The offshore banks that acted as the creditors in this system suddenly stopped lending. They did not trust the collateral. This is the key concept that you must understand to see the coming collapse. The Eurodollar system runs on collateral. In the old days, money was backed by gold. If you had gold, you could get a loan. In the modern shadow banking system, money is backed by financial collateral, usually U.S. Treasury bonds or high-grade corporate debt. These bonds are the gold of the digital age. Banks use them to secure loans from each other. If I want to borrow $1 billion from you overnight, I give you $1 billion worth of Treasury bonds as security. This keeps the wheels of global finance turning. But there is a flaw in the system. The system requires pristine collateral. It needs assets that everyone agrees are safe. When the perception of safety vanishes, the system freezes. In 2008, the mortgage bonds that were being used as collateral turned out to be toxic. Suddenly, no one wanted to accept them. The banks that relied on pledging these bonds to get dollars were cut off. They became insolvent overnight. The Federal Reserve tried to fix this by printing trillions of dollars of bank reserves. This is what they called quantitative easing. They thought that if they flooded the U.S. banking system with cash, it would spill over into the global system and get everything moving again. But it did not work as intended. You can print bank reserves, but you cannot print collateral. You cannot print trust. The offshore banks remained scared. They hoarded the new dollars instead of lending them out. This is why we have seen a permanent state of low growth and fragility since 2008. The Eurodollar system never recovered. It has been shrinking relative to the global economy for 15 years. We are living in a world that is structurally short of dollars. This sounds paradoxical because we see inflation in the grocery store. But we have to distinguish between consumer price inflation and monetary deflation. The inflation we saw in 2021 and 2022 was caused by supply chain breaks and the government mailing checks directly to people. It was a fiscal shock. But underneath that temporary inflation, the deep plumbing of the global financial system is suffering from a deflationary drought. The shadow banks are not lending, they are contracting. This creates a dollar shortage. When there are not enough dollars circulating globally, the price of the dollar goes up. This is the dollar wrecking ball. A strong dollar is a nightmare for the global economy. Most emerging markets like Brazil, Turkey, and Indonesia borrow money in US dollars. And when the dollar gets stronger, their debt gets more expensive. They have to sell their own currency to buy dollars to pay the interest. This crashes their currency and causes local inflation. It forces them to raise interest rates to defend their currency, which crushes their local economy. The Federal Reserve sees this happening, but they are powerless to stop it. They can raise or lower the federal funds rate, but that only affects the cost of domestic borrowing. It does not force the shadow banks in the Cayman Islands to lend to a company in Malaysia. The Fed is like a man trying to steer a massive ship by trailing his hand in the water. He can make small ripples, but the current is driven by forces far beyond his control. The creditor in this global system is not a single person or a single bank. The creditor is the collective hive mind of the offshore banking network. And right now, that hive mind is in retreat. They are de-risking. They are demanding more collateral for every loan. They are shortening the duration of their lending. This is why we are seeing liquidity crises pop up everywhere. It is why the U.S. Treasury market has become so volatile. There are not enough balance sheet capabilities in the shadow banks to absorb all the debt the U.S. government is issuing. The government is issuing trillions in new treasuries, but the dealers who are supposed to buy and sell them are constrained. They are full. They cannot take on more risk. This leads to the terrifying possibility of a failed auction where the U.S. government tries to sell debt and nobody shows up to buy it. If that happens, the interest rates on U.S. debt would spike uncontrollably. The Fed would be forced to step in and buy everything. This is the endgame known as yield curve control. It means the end of the free market in bonds. But the Eurodollar mystery goes even deeper. It explains why sanctions are losing their effectiveness. For decades, the U.S. used the dollar as a weapon. If a country misbehaved, the U.S. would cut them off from the New York banking system. But because the Eurodollar system is offshore, it allows for workarounds. We are seeing the rise of a parallel shadow system that bypasses the U.S. entirely. This fragmenting of the global monetary order is a direct result of the inherent instability of the Eurodollar system. The world knows that the system is broken. They know that the Fed cannot guarantee the supply of dollars needed for global trade. So they are looking for alternatives. They are looking at gold. They are looking at Bitcoin. They are looking at local currency trade deals. This transition will not be smooth. The death of a global reserve currency system is always a chaotic and violent process. As the Eurodollar system contracts, it creates a vacuum. Liquidity evaporates. Asset bubbles that were sustained by easy shadow money will burst. We are already seeing this in commercial real estate. We are seeing it in the implosion of the Chinese property market, which was heavily funded by dollar-denominated debt. The contagion is spreading. The Fed will try to fight this with the only tool they have, which is more printing. When the next crash hits, and it will likely be a liquidity freeze in the shadow banking sector, the Fed will panic. They will realize that interest rate cuts are not enough. They will have to find a way to inject liquidity directly into the offshore world. This puts the United States in a bind. If they bail out the world, they destroy the value of the domestic dollar. If they refuse to bail out the world, the global trade system collapses and drags the U.S. economy down with it. There is no good option. This is the trap of the Triffin dilemma, which states that the country that issues the global reserve currency must run trade deficits to supply the world with money, but eventually those deficits become so large that they destroy confidence in the currency. We are at the end of that cycle. The Eurodollar system allowed the U.S. to cheat the dilemma for 50 years by creating phantom dollars offshore. But the phantom is dying. The credit creation mechanism is broken. The implication for the average citizen is profound. You're told to watch the Federal Reserve meetings. You're told to watch the CPI numbers. But those are lagging indicators. The leading indicator is the shadow money supply. And the shadow money supply is screaming danger. When the offshore banks stop lending, the deflationary wave hits the shores. Prices of assets fall, jobs are lost, credit becomes impossible to get. And then comes the reaction. The government will not allow a deflationary depression. They will change the rules. They will introduce central bank digital currencies, or CBDCs. Why are CBDCs the answer to the Eurodollar problem? Because the Eurodollar system is decentralized and uncontrollable. A CBDC is centralized and totally controllable. The Federal Reserve and other central banks want to bypass the shadow banking system entirely. They want to create a closed loop where they issue the money directly to the user, and they can see where every unit goes. They want to eliminate the offshore casinos that they cannot regulate. They want to bring the money home. But to do that, they have to destroy the privacy and the flexibility that the current system offers. The move to CBDCs is not just about technology. It is a desperate attempt by central banks to regain control over the money supply that they lost 60 years ago to the Eurodollar market. They are trying to put the genie back in the bottle. But until that new system is ready, we are living in the danger zone. The period between the death of the old system and the birth of the new one is where the fortunes are lost. The Eurodollar shortage is the invisible hand that is crushing the global economy. It is the reason why, despite all the money printing, money feels tight. It is the reason why small businesses cannot get loans. It is the reason why developing nations are starving for capital. The creditor has left the building. The decentralized network of banks that fueled the globalization of the last 30 years has decided that the game is no longer worth the risk. They are taking their chips off the table. This leaves the world with a mountain of debt and no way to roll it over. When a bond matures in the Eurodollar market, it needs to be paid off with a new loan. If no one is lending, the borrower defaults. This triggers a chain reaction. One default leads to another. The collateral that underpinned those loans gets sold off, which crashes the price of the collateral, which forces more margin calls, which causes more selling. It is a doom loop. In 2008, the Fed stopped the doom loop by guaranteeing the debt of the U.S. banking system. But they cannot guarantee the debt of the entire world. The scale of the Eurodollar market is simply too big. It is estimated to be in the tens of trillions of dollars, possibly even larger than the official GDP of the world. No central bank has a balance sheet big enough to backstop that. So we watch the Fed chair give speeches about soft landings and employment data, and we realize it is all theater. He is the captain of the Titanic talking about the dinner menu while the hull is already breached. The water rushing in is the liquidity crisis in the Eurodollar market. Most passengers do not see it yet because it is happening in the engine room deep below the deck, but the ship has stopped moving. The engines are failing. The lights are flickering. The smart money is already heading for the lifeboats. They are moving out of financial assets that depend on the shadow banking system and into hard assets that have no counterparty risk. They are buying gold. They are buying land. They are buying energy. They know that when the shadow money evaporates, only the real things will remain. The mystery of the Eurodollar is the mystery of the modern world. It is the invisible empire that we all live in. It fueled our growth, it funded our wars, and it built our cities. But empires do not last forever. The credit cycle that began in the 1950s has reached its mathematical limit. The expansion is over. The contraction has begun. And because this system is global, the crash will be global. There will be no safe haven in the fiat currency world. The only safety will be found outside the system entirely. This is why understanding the plumbing of the financial system is not just an academic exercise. It is a survival skill. If you understand that the dollar is not what you think it is, you can prepare for what comes next. You can see through the illusions of the stock market and the empty promises of the politicians. You can see the shadow looming over the economy, and you can step out of its path before it falls. This is the reality of the great Eurodollar shrinkage. It is a slow-motion train wreck that has been happening for 15 years and is now accelerating. The creditors are calling in their loans. The liquidity is drying up. The tide is going out, and we are about to see who has been swimming naked. Do not rely on the Federal Reserve to save you. They are not in control. They never were. The shadow banking system ran the world, and now it is breaking the world. The only person who can save you is you. By educating yourself, by taking control of your own assets, and by refusing to play a game that is rigged against you. The wealth collapse is coming, but it does not have to be your collapse. History rewards the vigilant. Stay watching, stay prepared, and never trust a ledger you cannot see.